Hey there, I'm Pete Townsend, and this is Money Never Sleeps. We look inside the minds of entrepreneurs and at the crossover of startups, enterprise, finance, technology, and life as we know it. This episode of Money Never Sleeps is sponsored by SecuriCentrix. SecuriCentrix is a trusted cybersecurity company with offices in Dublin, Cape Town, and London. SecuriCentrix provides expert advisory services, primarily in the finance and fintech industries, with tailored security solutions to fit your specific needs and regulatory challenges. In this episode, Eoin, Fitzgerald, and I riff on Eoin's new role at Enterprise Ireland going into deep tech, before we get into the final nail in the coffin for Meta's former crypto project, Diem. We also look at the next steps for Ant Group now that Jack Ma is formally out, the back and forth on the environmental impact of crypto and Bitcoin's role in all of that, some new ideas on agri-finance thanks to past guest Nik Milanovich, and some details on a Techstars Web3 event that I'm hosting with Genesis Block and Union Square Ventures in New York City next week. All right here on Money Never Sleeps. Hey, Eoin.
Hey, Pete. How you doing?
You're looking sharp today, pal.
I know. I have a suit and tie on. Feels good.
Amazing. I was just thinking that the pictures that you and I have that we used for the artwork, we both have our ties off. I think I wasn't wearing a tie when my picture was taken. I don't think you were either, but we have some older ones, like that rarely used graphic that we had made with the two of us on the dollar bill.
Oh, yes, I do. I saw that recently. Yeah, I saw that this morning on something, and I thought, hey, I haven't seen that in a while.
It pops up somewhere every now and again, and both you and I have ties on. That's my picture from like 2012, I think. So it's like 10 years ago.
We're trying to be cool and hip now.
Yeah,
that's why we don't wear ties.
You need the skinny tie, the little leather one with a piano on it.
Oh yeah. No, Jesus.
we're going way back, the Wayback Machine. Yeah. But you've got good. You got a new role at Enterprise Ireland, don't you?
I am. Yeah, you'll see my LinkedIn update this week. But no, so obviously I've been doing all my fintech focused for the last 5.5 years in Enterprise Ireland, particularly, but obviously prior to that as well. And I fancied a bit of a change, but what feels more like a natural kind of change. So I've moved into a role in Enterprise Ireland in what's called commercialization. So it's working with research in universities to become spin-out companies. So I've always kind of been interested in this particular piece. Once I knew about it, we have what's called a commercialization fund, whereby we fund really interesting kind of deep tech research in universities with a view to it turning into a really exciting kind of spin-out company. Okay. So far higher risk, longer kind of time. Usually takes about 12 years to kind of get a return on something like this. So a longer time horizon from an investment point of view. But it is kind of deep tech. It's, changing the world sort of stuff. Like Soapbox Labs is a really kind of well-known example of a company that would have been funded by the commercialization fund. So there was a chance to move across to that team. And what I'm doing is still bringing a lot of the old role to it and trying to bring a lot more fintech. Like we haven't funded any fintech companies out of the commercialization fund, but from an AI, blockchain, even crypto point of view, like there should be loads of research and there is loads of research being done in universities. We just need to unlock that. Or I'd like to see a lot more research going into universities. So we also fund ideas being spun into a university. So if you or someone in the industry came to me and said, look, I have this idea but it's, it requires a lot of research and it's fairly advanced tech, and I'd like to bring it into a university and then see if we can develop it and build it out. And the great thing is, like, we provide a lot of funding, way more than the usual investment that I do. We're talking average kind of check sizes, if you want to call them that, of 400 or 500K per project. And it's great because it's going into university and then they're bringing in a team to build it. And it gives a lot of security to a potential founder, let's say from the industry, or a researcher that there's funding there to kind of build out the concept, sign up some trial partners, and then potentially spin it out, with some really exciting IP. So it's very cool. And like I said, I'm putting a call out there that I would like to see a lot more fintech research being done and spun out. I looked at one idea last year, which is around using AI for kind of credit underwriting, which is exciting and like an obvious kind of use case. So there's plenty of stuff like that I'd like to see more of. So that's kind of going to be the focus for the next while, doing quite a bit more of that. So
congratulations on the new role.
Thanks very much. And it's it's obviously been an area of focus of sorts internationally, but I was only looking at numbers the other day. The volume of investment gone into kind of university spin-outs has grown from, it was 2 billion globally in 2013 to 32 billion in 2021. So there's a massive increase in focus, and obviously, the pandemic helped in that sense because you had the vaccines and the mRNA stuff being done out of Oxford. Like that's all deep tech university research spun out into companies. So that's a really strong example of what potentially can be done. And about 60% of all kind of funding for university spinouts goes into kind of life sciences and med tech solutions, and the balance effectively goes into ICT. So there's a lot of really interesting stuff going on in the space. So it's broadening the horizons as well as not just the fintech stuff, but like at the moment I'm looking at two projects. One is an interesting cybersecurity one, and the other is a really interesting project around what's called egg sexing, which is around identifying the gender of eggs for poultry, and which is important in certain countries. So that's a feasibility study we're looking at the moment to see if there's a market for it, which there appears to be in certain countries. And it's really advanced kind of being able to detect the anomalies in eggshell or in eggs, when they're made, to detect the gender of particular types of animals and stuff, which is just kind of mind blowing.
Wow.
But has a real use, real potential opportunity, but not something I'd ever would have thought of looking at. So really cool stuff. And I'd hope now over the next while that we'll be able to get some of the founders on to the show to talk about some of the really interesting kind of research and stuff that's been done. So
yeah. I've got one for you to start digging into, and I mentioned it last episode, but I hadn't thought deeply enough about it yet. I was riffing before Christmas, and might have been, I think we were talking about Andrew Mullaney from Premind, and about machine learning and about data sets required to drive machine learning. And Aman Kohli, who's one of the mentors for Techstars Web3, he was hinting at this as well, is that what happens to all of that data that's used to teach these models and used to train these models that are designed for machines to learn, or where you can say, well, geez, no, I'm not even going to go down that rabbit hole. And is there a place for blockchain in all of this in terms of being able to have that transparency as to what data was used in order to build that model, so that you can pull things like bias out of this and say that, yes, this machine learning model is certified as being bias free. Yeah. So tons of research needs to be done around that. And that intersection of machine learning, artificial intelligence, and blockchain is an intersection that we don't find ourselves at too often these days. But
that's a really interesting one, because if you take into account things like credit underwriting, like Apple had an issue with bias with their Apple Card, and you see it a lot. And like I know Lending Club provided publicly available information on all their loans from 2008 to 2017, and they provided all the data sets, and a lot of that data was used to train kind of early models in this space, because look, you had data to work with, a considerable amount of data. But like that, there's inherent biases within that, especially in the US, with different race and different gender being negatively impacted by it. So like that, you might start off training your model on old data without realizing there's a bias built into that.
Exactly.
Then, so, exactly. That's certainly an interesting one.
And things are moving so fast in this space. And, we talked about ChatGPT last time, told my parents all about it when I was talking to them this weekend. I'm like, Ma, you could write your thank you notes you sent to people using ChatGPT. And she's like, what is that? I've got to go write that down. And so she actually did get up from our FaceTime call and go write that down. And, we'll see what mom and dad start using their AI to power their, I said, what about book reports for kids? Give me a book report on Sherlock Holmes. So
essays, all that sort of stuff. Because it's happening in the US, obviously, with universities. There's a number of colleges they're trying to find a solution now to students writing their essays using ChatGPT.
I'm going to try something out. I wrote a series of analogies, as you might imagine I do when I did Greek mythology as an elective course when I was in college. And I was writing an analogy between a childhood experience and a Greek myth. And I did that. I think there was something about, what was it? Sisyphus was rolling the rock up the hill, and by the time he got to the top of the hill, it fell back down. And I made an analogy to me climbing up the hill in my sled as a kid. And when I got all the way back up to the top of the hill, I'd trip and fall into the sled and go all the way back down the hill. And I had to, so that was actually a real thing that I wrote. So let's see if ChatGPT can write me something like that. Yeah. I'll give it a go.
Cool.
But on the topic of blockchain. I know that was one half
Yep.
of what we talked about just there with AI and ML. We have some news from a story that we had been tracking for a while with Facebook, right? Meta, Libra, Diem, went through so many different names. The Novi wallet, I think, at one stage.
Oh, yeah.
Is finally dead and buried. So Silvergate were the ones that bought the Diem project with the team, the technology off of Meta, I think last year. Silvergate are a crypto bank or a provider of, they do a lot of fiat to crypto services. And their stock, this is from CoinDesk on the 5th of January. Silvergate Capital stock plunged 46% after the crypto bank said it saw an outflow of $8.1 billion in digital asset deposits during the fourth quarter. So they've slashed 40% of their staff, or around 200 employees, according to a filing with the SEC they did. They also, get ready for this, cut their plans to launch a digital currency with the Diem platform that they bought for $196 million and wrote it off.
Whoa.
And they're saying, we spent $196 million and we're writing it off. And we're going to take it as a loss. We're going to talk about accounting rules, talk about depreciation of assets, of acquired assets, of goodwill, of all, gone.
Wow.
So all of that work that Zuck went through to get this is now just dead.
It's dead. Yeah. It's crazy. And like, you have to think that the regulators killed that more than
they did.
You know.
I mean, you know, you get that fear of 2 billion people on the planet or more that have access to this, to a cryptocurrency.
Currency, yeah.
And that when you've got that big of an audience, that's huge.
Yeah.
And you know, we've talked about this before, in that all of these economic graphs that when I was in university and college, whatever, that you'd write in your notes, and supply and demand, and you draw the curve, and you're trying to explain stuff in these essays or in these exams you're doing. There is this hole that is poked down at the bottom of all those graphs that is impacting the supply and demand of money. And that little hole is called crypto, no matter what's happened over the last year in the market, because it's impacting the supply and demand of money. Very, very small pinprick right now in that graph of the supply and demand of money, but it's getting bigger. It will get bigger and bigger over time. Facebook or Meta's crypto would have poked a massive hole in that graph, or at least something noticeable enough. Yeah. Where, you know, where the things that monetary policy setters and central banks do to control the supply and demand of money in each one of their economies, the fact that people are using a alternative currency in those jurisdictions, in those economies, means that you're just going to have a tougher time controlling it. So yeah. I don't know. I mean, you know, as being a big proponent of crypto, it's I can't say I'm sad to see it go. I can't.
Yeah. Well, it's one of those like that, you know, because the concept was really interesting at the start, and obviously having all those list of partners signed up, and then obviously like the regulators clamped down hard on it, but also it was almost on losing kind of platform anyway, because it came out under Facebook. Like, it's the type of thing that if it had been launched by someone else, might have, you know, someone with a far more favorable kind of public
like
opinion. I don't know. Like, if you imagine if the same thing happened and Apple had launched it, it would have been a very different scenario.
Yeah.
Like, look at what they've done in the US, and they've managed. I think they have like 12 states now where you can keep your ID&V on your iPhone.
Yep.
You know, and they've managed, and they own something. I think they have the patent for it or something like that. That effectively is giving them ownership now, and that's just going to keep getting rolled out. And they've kind of done it under the regulator's nose to some degree. You know, you could imagine that it would have been a very different proposition if Apple had announced a version of the same thing. I don't think it would have died. It would have been far more favorably received, and we probably would have ended up with some type of Apple currency by now.
Yeah. Well, I mean, with the what's the word? Pervasiveness right now of Apple Pay.
Yeah.
I mean, they kind of don't need one.
Yeah, but back then, like, if you know, a lot of the negativity around the Libra project or whatever its different names have been was around it, the fact that it was Facebook bringing it out.
Oh yeah, definitely.
And all of their privacy issues prior to that and everything. So
it's kind of like with how an organization is perceived, right? When it is just purely social media, when it is an advertising business model.
Yeah.
Does that really point to you, hey, this will be a sound compliant group in terms of being able to manage a money supply?
Of course not.
No.
Yeah.
Apple has a lot more weight and girth to its business. And it might have taken off, but yeah, that would be a good example.
But at the same time, look at, what's it, you could argue it's a sad end. It probably did a lot more for the industry and the broader kind of acceptance and, regulatory scrutiny and focus and everything on it. Like there probably wouldn't be a digital euro being discussed and being kind of piloted and all this stuff if Apple or Facebook hadn't announced this years ago.
Yeah, I know. And my tune has changed over the years on central bank digital currencies. But again, like I talked about last week, that this is all progress, and it's technological progress, it's financial progress.
Exactly.
Are CBDCs, in digital euro, digital dollar, in line with the spirit of cryptocurrencies? Absolutely not. It's just leveraging technology to do things better.
Yep.
So, it's so many different projects on that front that I see moving forward at least once a week. Different countries around the world. Nigeria is doing really well with that. Smaller economies. Obviously, Nigeria is a huge economy in Africa, but smaller economies in other places. Turkey taking off with a project there. I think the Bahamas have had one. So, I'm not going to stand in the way of that progress,
Yeah.
Not that I could stop it anyway. But again, the crypto purists, the Bitcoin maxis, as we call them, they all look at some of this stuff with CBDCs and they just turn their nose up and say, well, it should have been Bitcoin. Like, I don't think it can be Bitcoin. It's just not, it's not designed to be that at scale. And we're going to talk about that a little bit later too. So on the topic of changes and out one door into the other, or perhaps just out one door, Jack Ma from Ant Group. He is now out of Ant Group. And this is in the FinTech Blueprint. So this is Lex Sokolin, who writes so brilliantly every week. And I haven't been reading much of his recently, but I was looking I'm seeing these headlines pop up on Jack Ma without much analysis there. Where's the analysis going to be? I'm seeing things pop up on Genesis and what's going on there with Gemini, like we talked about last week. And where's the analysis? Don't have that yet. But who's going to do the analysis? Lex Sokolin will do the analysis in FinTech Blueprint. So shout out to Lex. Never actually spoken with him, but I know one of the guys who used to work for him a few years ago when he was doing Autonomous Next. So just hear good things about him as an individual. And he's now I think he's like the head economist for Consensus now, which are the main consulting business and enabler around Ethereum. Let's scroll down to Jack Ma here in the article. So if people remember or not, it was within the last couple of years that Jack Ma, the founder of Alibaba Group and private equity firm Yongfeng Capital, he's stepping down from Ant Group. This is right from Lex's post. They are the fintech arm of the e-commerce giant Alibaba that separated from the parent company in 2011. Jack will see his voting rights drop from over 50% to 6.2%. Big drop, reopening the possibility of an Ant Group IPO. So it was going to happen in 2020. The Ant Group was going to go to IPO in 2020. And a few days before that, I think Jack Ma was speaking at a conference and basically dragged the Chinese government regulators through the mud. Yep. And so they took wind of that, or they caught wind of that and said, sorry, Jack, no IPO for you. So,
and then he disappeared.
Yeah. Remember? Yeah, exactly. So no one had seen him, and now he's not dead, right? He's still out there. 6.2% of that business, he's pretty much going to be set for life. But now they've overstacked the board with independent directors. They are looking perhaps at the earliest they could do an IPO, I think is 2 years. So the rule is on the Hong Kong Stock Exchange that you can't have any material ownership changes within 2 years before you do an IPO. And I think the Shanghai exchange is 3 years. So I think they'd look to do Hong Kong, but this is just a big change. I mean, the visionary that built all this, starting back in 2011, not even starting back in 2011. 2011 is when they separated the business out, Ant Group, from Alibaba, as having all of that fintech built and working and operating at scale for billions of people. It's unfortunate that he's had to move on, but Bill Gates stepped down, Jeff Bezos stepped down.
Yep.
that's what happens when you get a business to a certain size and scale like this, is that you move on and you hand it over to people who are going to run this business, and that where the true visionary side of things is becomes more distributed around your organization. So, but just
it was obviously forced on them, but at the same time, probably all the best for the company. Like they're talking about, putting in a better boost in the capital base of its consumer loan unit, which was under pressure, and getting necessary licenses for credit scoring. And like it seems like all the work that's been done since this whole thing blew up has been to kind of improve and kind of right size the entire business. And like when they've over 1 billion annual users, they've 80 million merchants on the platform. There's their digital finance app has 729 million active users. 2,000 partner banks. Like it's a huge
ecosystem. It's an ecosystem.
Yeah, absolutely. So it there's so much interconnected with it that it needed obviously to be kind of shaped and kind of, made into a far better business, and a lot better infrastructure and regulation and compliance and everything put in place. So it sounds like all the right things have happened. It's just it wasn't a good look for Chinese companies and everything in light of all the kind of geopolitical stuff going on, that this is the way it happened.
Yep. I mean, it's amazing what's in this ecosystem, and Lex included a graphic in his post, and we'll obviously put that into the show notes, but digital payments at the core of Alipay, and then they built around that investment tech, credit tech, and insure tech.
Yeah.
And that in and of itself is wonderful. And being able to do that with digital payments at the core. And that would be something, a platform that most fintechs would be envious of.
Oh, it's like the gold standard almost.
It is.
The financial app that you want to have.
And what you've built out around that are mobility services, municipal services, local services, and many more services, right? And it's like when you get to that size and scale where you have, that level of users across so many different types of mini apps or so many different kinds of functionality, that just becomes a management feast. That becomes a development of having the right governance around your development, having the right governance around your release framework. You're a big software company, right? And that's just, it needs a different type of leadership. So I don't think that was the angle for this. Obviously the angle was, well, if the next realistic step for this company, for their capital structure to finance this business on an ongoing basis, is to do that through the public markets. Well, they kind of need to take whatever steps are necessary in order to enable them to do that, right? So it was more on capital structure than it was on, do we really need this visionary Jack Ma? I think anybody would love to have that visionary Jack Ma. Let's see what happens to Jack Ma. And see where he goes next. 6.2% means that he's, like we said, set for life, but you can't keep a good man down.
Let me take a minute to tell you more about our sponsors. SecurityCentric strives to be the trusted partner that secures your information assets deemed critical for your business. SecurityCentric also delivers the highest level of security expertise and support to their clients. Even further, SecurityCentric provides independent cybersecurity assessments and advisory against best practice industry standards and compliance frameworks. Working as an extension of your team, SecurityCentric helps you recognize and control data risks to your business by understanding your level of risk. In short, SecurityCentric provides many solution offerings from assessment and advisory, managed security services, cloud and infrastructure validation, vulnerability management and testing, and payment security. Get in touch with the team at securitycentrics.com to learn more, or email info@securitycentrics.com. That's SecuriCentrix.com.
Next thing I wanted to look at was, and this was in Finextra, and I always kind of have this back up against the wall mindset when it comes to the ongoing theme of what is cryptocurrency mining doing to the planet. So Finextra put my back right up against the wall and said, cryptocurrency mining and trading are devastating the planet. And so this was on the 5th of January, and that it was a new study from Forex, Forex, suggests that reveals 431.6 million trees would need to be planted to offset Bitcoin's pollution over the last year. Wow, that's a lot of trees. That's a lot of trees. Okay, so just reading off some of the details here. Bitcoin, the most popular coin for novice traders and institutions alike, ranks first on the list, obviously, of cryptocurrencies that they looked at here, with a projected 86.3 million tons of CO2 emissions for 2022. A huge 431.6 million trees would need to be planted, as we said, in order for Bitcoin's annual CO2 emissions to be removed from the atmosphere. So people will point to that and say, hey, what about crypto? You know, where are we going with this? Is this bad for the planet? All this electricity that is needed to keep Bitcoin running, big decentralized, call it, I don't know, economy that Bitcoin is it worth what it's doing to the planet? I personally think Bitcoin will continue to become, I don't think it'll become marginalized, but I think Bitcoin will become less and less critical to how digital finance operates. Bitcoin, and we've talked about this before, was just the first one. But we've proven, or not that we've proven, people generally are not building other things on top of the Bitcoin blockchain other than Bitcoin. And it's there and it exists for a reason. Ethereum has moved significantly forward. And reading down through the article, it says Ethereum, by contrast, has managed to massively decrease its annual CO2 emissions by nearly 100% after moving to the proof of stake blockchain last year, meaning that its gas fees have been reduced significantly. Network has been able to process transactions a lot faster. So compared to the 86.3 million tons of CO2 emissions for Bitcoin for 2022, we're looking at 8,000, a little less than 9,000 tons for Ethereum. So only 44,000 trees need to be planted rather than 431 million trees.
Quite a difference.
And I was talking to someone right before Christmas about this, you know, someone was talking about this dollar cost averaging portfolio of crypto of 60-40 Bitcoin, Ethereum. And someone who I respect has been deep in this space for a while kind of looked and said, Pete, probably want to flip that 60-40 Ethereum, Bitcoin. So this is not investment advice. It never is. This is for informational purposes only. But I just, with being, you know, in this space and seeing how many people are building on Ethereum and the strides it's making, and the fact that this is, you know, Algorand is always put forward as the, you know, eco-sensitive blockchain or the ESG-friendly blockchain. Algorand's not really anywhere near the scale right now of Ethereum. And Ethereum, just the feature point of Ethereum in this article means that, hey, this will likely be the one that people will build on and will continue to build on for the foreseeable future. Will there be others? Absolutely. But I think this one is, you know, the writing is on the wall here.
What I always find, like, because, you know, they're big numbers and it sounds terrible, and obviously they're, you know, they're written to grab your attention, but I always find that if it lacks, that article to me lacks any context, like, you know, relative to what? It sounds like a massive number, but relative to what? Because, like, you know, what's the environmental impact, for example, of, you know, data centers and cloud computing and some other massive...
YouTube. So in other graphs we've seen where YouTube has a higher energy requirement every year than Bitcoin.
Yeah, so
YouTube's
relative,
killing trees.
You know? Yeah. How many trees do we need to plant for YouTube? Like, it just, you know, because I saw that and I read that first and I thought, oh, geez, that's bad for what? Like, what are we getting out of Bitcoin? Like, but like to your point there, what do we get? What's the return on YouTube and all these trees that would need to be planted for YouTube? So, you know, I find the context is lacking in a lot of these things, and it's just headline kind of grabbing noise. But I suppose it's useful then, the context in relation to like Ethereum and reducing their kind of cost and everything. That's good information to know, and that those things are happening.
Yeah. And it's like, I've always tried to be objective on this stuff. Like, don't shy away from anything in everything that you do. And just, if someone has a point and they're informed, wonderful. If they're misinformed or incomplete or out of context or off the wall, talk through it, right? Because it's these themes that, you know, again, to quote Chris Dixon from A16Z, I've never met anyone in the space who's both skeptical and informed. So I had a call with a couple of the partners from A16Z, and I said, yeah, I walk around quoting Chris Dixon all the time. They're like, you loser. They're like, we know him. We work with him every day. You don't have to, we're not going to quote him to his face. Like, I know, but he says some pretty smart things. So he sounds smart when you quote him, as long as you give him the credit for it. Right.
Yeah. That's it.
As long as you give them the credit for it. But no, that one, again, this is always going to be a theme that comes up. People from all different walks of life with different levels of understanding of the space listen to this podcast. So if anybody had any, doubts as to the environmental impact and why we're talking about this, then, again, my point is that Bitcoin has been the first. It is the first, will always be the first, will be the OG of crypto, but the usability of it for the long term, that is just not fit for becoming a global currency with the way that it currently runs and the way it operates. And there's no change to that. It's a decentralized protocol. So unless the whole community gets together and says, hey, we're going to move to proof of stake as well, it will continue to be a proof of work blockchain that will expend a lot of energy. So, and that is a big impact to the economics of Bitcoin forever. So, that it is what it is. And, but, I was listening to Peter McCormick from What Bitcoin Did this morning, talk to his pal, Stephen McClurg from Valkyrie. And they were talking about Bitcoin at 69,000 was just ridiculous, that it was leverage that just drove all that up. And the big bubble and the leverage bubble that has burst and all the lending that was taking place out there with Genesis, with Celsius, with Alameda and FTX, with Three Arrows Capital, with Voyager. All of that was just, and to quote, I forget who it was, but a former Fed Reserve chairperson, Alan Greenspan, might have used the word irrational exuberance when he was referring to what was going on pre-financial crisis. Yeah. So it's, tons of that out there. And it sucks because a lot of people have lost their jobs and that, with what's happened in the crypto markets out there. But a lot of that was afforded by the fact that Bitcoin was at 69,000.
Yeah.
And that was 60% of the cryptocurrency market. So, when things return to normal, back down 15, 16,000 is what Stephen McClurg was saying, that feels a bit normal for a while. It will continue to be that way for a while. Then, we're going to be in the space for a while.
I've lost a year on my side. No, the year.
There was a link with all of this, with looking at the ESG impact, to something that you were wondering about recently on agri-finance, wasn't it?
Yes, I came I came across a great article on Forbes from Nik Milanovich, who we've had on the show from This Week in FinTech. And I follow a lot, like another guy who writes really intelligently about FinTech topics like Lex Solican. So I read a lot of his stuff, and it was in Forbes there on the 5th of January, the next FinTech revolution, agricultural finance. And I suppose what drew me to it was not only that Nick was writing about it, but, we've talked a few times about, what does the future hold for FinTech? And, even when we've talked about things like neobanks, it's about going down particular verticals and niches. And, there's a lot of opportunity in particular niches that we wouldn't think of. And like the example I always give, myself and yourself, we double up on lecturing for courses and, talking to students and stuff like that. And the example I always use is Starbucks and the amount of money that sits on its card and, the payments that it processes and things like that. And in the same kind of vein, then, Mick wrote really, really intelligently about agricultural finance and the opportunity, where it might represent only a small part of the global financial services market, but yet at the same time is still a huge market, and just going through here, like there's, in the US alone, you had farms contributing 134 billion to GDP in the US, over 1 trillion to the economy. It's about 5% of total GDP, the US. And then in some countries, obviously in emerging markets, it could be as much as 25% of total GDP. But you drill that down and you start looking at kind of some of the products or the opportunities there. You talk about something like agricultural lending. So Oxbury Bank is a bank in the UK. It did funding twice last year. It does about 650 million in agricultural loans to farmers. You've a couple of banks in Turkey and in Eastern Europe do supply chain financing. Farm Payments is a company called Bushel, which recently launched Payment Facilitator and connects 40% of grain providers in the US. This is a market or an industry where checks are still estimated to be about 90% of the industry. And what kind of made me think about it even more is that I was reading, I couldn't find a tweet. Someone tweeted something about the John Deere. Obviously, John Deere provides like farming equipment, so in last year, for example, they did 44 billion of net sales on equipment and farming related things. It's huge business. But when you looked a little bit deeper, what I found fascinating, and our nerdish fintech way, was that actually almost 50% of the 44 billion, 39.7 billion was equipment sales. And of that, almost 50% of that is financed by John Deere's financial arm.
Okay.
So you're talking about an incredibly large, equipment financing business sitting in what is a farming equipment business.
So many strands to pull on here, Eoin.
Yeah.
There's the Irish strand, right? Which is that when I was talking to a venture capital partner a few years ago about launching a fund in Ireland, she's like, you need to be a generalist fund. You need to be able to handle agri-tech, medical devices, medtech. I said, that doesn't float my boat. She's like, well, don't bother then.
Yeah.
But because of the agrarian economy roots that Ireland has, and that where there have been so much innovations around that at small scale, but also larger scale, that have grown into bigger businesses, and that there is an audience here for that, for agri-finance. And that's something interesting to pull on. Also, real world assets in DeFi. I have friends at DeFactor, Alejandro Gutierrez, shout out to Alejandro, who's bringing real world assets as collateral into decentralized finance, and so that you can lend off the back of those assets. John Deere and farming equipment and all that type of stuff, and being able to finance probably your next crop and what you need to do to get that planted by getting some collateral and off of your tractors. That is something to explore. The other thing is that if you think about Chicago, right, the development of the economy around Chicago and Illinois, and being in the center of the U.S. and having, what the hell is the river that goes through Chicago? Do you know? They dye it green every St. Patrick's Day.
I don't know the name. I know the one because I see the pictures of it dyed green. I don't know the name of it now.
Yeah, it's not the Chicago River. It's something else. Anyway, I don't know. It's not the Mississippi. But that all developed, and Chicago as a financial center developed in terms of the innovations that they made around agriculture and commodities.
Yeah, I was going to
and
say commodity
futures
trading
and options and all of that, and forwards, all that type of stuff.
It was all from agriculture and wheat and grain and you name it.
All that was early fintech, and the whole derivatives market really has agriculture to thank for how that developed over the years and where that came from. So is there a next wave of innovation here around agri-finance? That could be something really interesting, and not anything that I saw myself ever talking about until you brought it up this morning, Eoin. So thank you.
Well, that's it. It's like that. I always find these things. I looked at it before because like that, a lot of it is, straightforward in inverted commas banking. You're funding assets, tractors, equipment, machinery. It's straightforward. It's just not. It's not a market you would think of as being big. You think of it being big, but you don't think of financial services having a big role in it. But yet, it's clearly enormous if there's. And then, it tweaked my interest a couple of years ago. I read there's a really interesting Harvard Business Study case, and I must find it. I'll find it and see if we can put it in the show notes. And there's a bank in Italy that provides lending. It takes cheese as collateral. It's a particular type of cheese that takes a long time to mature, but they take that as a collateral in the loans for particular farms and everything. I thought this is fascinating because obviously my background is all lending and underwriting, and I'll find it and send it to you. It's brilliant story. But this is a very expensive cheese that takes a long time to kind of mature, and they obviously take it as collateral against loans for the farmers and stuff. So
there's so many puns that you can pull out of that.
We're not even going to go there, Pete.
The tip of my brain is teeming right now with things having to do with cheese. I had a milk fund proposed to me back in my funds industry days, where it was powdered milk, and someone had developed some arbitrage model around that and said, but we need to take custody of the powdered milk. I'm like, well, where do you do that? They're like, some warehouse in Amsterdam. I said, well, who makes sure those assets exist? Some specialized agent in Switzerland who knows powdered milk inside and out will come to make sure it hasn't been spoiled and that the storage conditions are still appropriate. I'm like, no, thanks. Go ahead and arb the hell out of that if you want, but it's not for me. So I would love to hear about the cheese fund, though.
I have it here. Italian retail bank, Credito Emiliano, which accepts Parmigiano Reggiano as collateral. and then ages it in climate-controlled vaults. It's been doing it since 1953.
Wow, that really takes the cheese on.
Jesus, we must move on before you... Here, I'll send you the link so that you have it for
I
show
will.
notes. It's
Oh
brilliant.
yeah, I'll drop it.
But
in
yeah,
there.
but like that again, we've talked about Amazon and even Facebook, WhatsApp as kind of financial services companies, and this is just another example of an area that is heavy in financial services without being obviously financial services.
It's the financialization of everything, as Simon Taylor says.
Yeah, that's it.
Right? Everything's got a price.
Yep.
Everything had, and there's a term, I'm not sure if you've heard this term yet, but it's called phygital. So this mix of physical and digital.
Yeah, no, I don't.
And digital twins of real world assets. As long as you can have some provenance and some reliability around the existence of a real world asset and how that's held and how that's safe kept, that you can link that to an on-chain asset. And could you put cheese on chain? Sure. You could put anything on chain.
Anything, yeah.
Could put you on chain, Eoin.
Yep.
If we wanted to. So we could fractionalize Eoin Fitzgerald.
Yeah, there you go.
Let's do that. But no, the long way to go in that space. But it's one that I'm watching closely.
I just sent you that article there, and you'll like it because it's titled "A Cheese Stands Alone." LOAN.
I don't eat cheese.
Yeah, I know that. Yeah.
Yeah. I'm the guy at the at the meetups that says, "Can you please order a cheeseless pizza?"
Yeah, my mother-in-law's like that as well. It's really weird.
Yeah, we'll see. We'll see if they remember next week in New York. But no, big event coming up next week in New York. We've got our friends from Genesis Block, like I mentioned last week, and not related to Genesis, that is owned by Digital Currency Group, that is going through the alleged difficulty with Gemini and with others. But this is Genesis Block, who are an awesome early stage advisor and legal advisor and company building and project building advisor in blockchain and crypto. And they're based in New York City. They're doing this event. Julian Pierce, shout out to Julian, is doing that with me. And Union Square Ventures, Nick Grossman, shout out to Nick, has jumped up and said that he's happy to host when our original venue fell through that we talked about last week with our ChatGPT doing the event announcement. So that is going ahead next Tuesday in New York City from 6 to 8 p.m. We also have Clarice Hagej, who we had on the show. She is the co-founder and CEO of Defense, who are crypto custody by API, and using multi-party computing, or MPC, which is all the rage in crypto custody these days. And also we have Konstantin Kogan, who is co-founder of Bullperks and GamesPad, will also be on the panel with us, with Nick, with Clarice, and also Julie Dwyer. Shout out to Julie from Chain Starters. And she is the COO and co-founder there. And both Clarice and Julie went through Techstars in the last couple of years. So Great to be able to get them. We're going to be talking about fundraising. We're going to be talking about the current status of Web3, what investors are thinking, obviously with Nick and with Konstantin. And it looks like we may be pulling in Austin Barak from Coin Fund as well. So, but that we're still confirming. So, but we put it in this chat. So we'll see if I think he's committed, but we're definitely going to find out. So it'll be a good gathering.
Sounds good.
First time doing a live event in outside of Ireland in a while, at least a year. So, really looking forward to doing that. Been part of a number of events, but haven't hosted a big one in a while. Only 60 people can fit in the room, so we have some capacity constraints to deal with, but looking forward to getting that one down next week.
Best of luck with that.
Thank you so much. And I will be flying back and forth in 4 days, and we'll see how I handle the jet lag.
Yep. No bother to you.
All right. Anything else?
No, that is it for me. That's all my stories I had and interesting thoughts.
All right. Well, glad to talk through this with you, and thank you for opening up my mind on agri-finance and on cheese.
There you go.
All right. Talk soon, pal.
Take it easy.
Adios. That does it for this week, folks. And you can learn more about the stories we covered in the show notes on our website, moneyneversleeps.ie. Thanks to Conan Brophy from Create Sound for mixing and editing this episode. Conan is an excellent media man to get in touch with when you're thinking about launching your own podcast. As for me, I'm an early stage startup investor focused on where fintech meets crypto and crypto meets Web3. There are plenty of links in the show notes on moneyneversleeps.ie on how to get in touch with us, so don't hesitate to reach out. Finally, until next time, thanks for listening. See ya!